All right, so is Cardano in trouble? Or is this an evil plan of Charles Hoskinson to take over the DeFi world? Today we're going to find out. Let's dive into it. My name is Paul Barron. Welcome back to TechPath. Let's go into a little bit about where Cardano is today. First of all, let's just take a quick look over here at, of course, CoinMarketCap. We'll take a look at where Cardano is floating at 142. And a lot of people are speculating that this might be kind of a calm before the storm, and the storm could go either up or down. I know that's not really a prediction, but we're going to dive into why this might be happening. But if you look at the 3-month trend, obviously back here in mid-May, all of our fall off, and this kind of this flat movement, other than this light move toward where we're trading at right now in the mid 140s, is kind of interesting. So it's going to be one of those things that I think a lot of people are looking at. Here's the thing I look at is when founders and also project leads start to do a lot more media, it does get into kind of an overview of whether or not what is it that they're either trying to say or trying to hide. Anyway, so let's jump to a couple of things. I want to also kind of support what the sentiment data has been. So let's jump over to Trade the Chain real quick. You can kind of see where this 7-day is. What you'll notice here is nothing special. This is a little bit both concerning, but if you're looking at Cardano on a long-term hold, this might be exactly where you want it to be. But a little bit on the negative side in terms of overall sentiment, and of course pricing somewhat flat over the last week in terms of where it's going. Now, when you look at that and compare it to what's been in the news, you wonder, why is Cardano not just exploding right now with both all the news from Alonzo potentially rolling out this summer to eToro basically saying this right here, which is eToro's kind of whole move where Cardano has leapfrogged Bitcoin as the most held cryptocurrency. Look at the holdings right here, which is kind of interesting. Cardano's ADA has leapfrogged Bitcoin to become the most held in 2021. This is Q2. 51% increase on the previous quarter, which is huge, over Bitcoin, which led the crypto asset bull run at the start of the year. Reminder, this also remained a popular at 42% increase in demand. However, it was eclipsed by Cardano and slipped from first to second place. So for Bitcoin to essentially get kind of slotted down on the eToro platform, that tells me, one, that there's a lot of people that are really looking at Cardano to make a move. So is this an early precursor to potentially where Cardano could be going? I want to also look over here at Grayscale. This was an article over here by Cointelegraph. Grayscale adds Cardano to their digital large cap fund after their rebalancing. Let me kind of point this out right here. Obviously, you can kind of see they've added it to the large cap fund, reflecting growing demand for crypto investments, pretty clear. But as of July 1st, 2021, each share of their GDLC basket is comprised of 67% Bitcoin, basically 25% Ether, and almost 5% Cardano right there. So, and of course, the remaining is a mix of Bitcoin Cash, Litecoin, and Chainlink. So you can kind of see. And of course, when you look at the overall coin market cap, Cardano is right there in the top 5 in all cases. And the scenario doesn't surprise me that we've seen this kind of move both from Grayscale and also from seeing the retail investor traffic over on eToro. So that is all in good and well for Cardano, and I think that's the point that everybody's looking to. You get a lot of subtle movements in the market that are causing people to say, okay, what's going up with Cardano? And of course, Cardano is in a position right now where they're going to roll out the Alonzo project advancement this summer. Now, here's the point. ABM Crypto reports basically as Alonzo White can soon go live on testnet, but here are the problems. And this is kind of where it starts breaking down. Right now, at this stage, we don't have the core support mechanisms, so Plutus, which is their back end, is not in place. Obviously, you need that to be able just to move forward. And if you look at, it can be as simple as a transaction in the returns hello world to a confirmation of payment that has been made. This means we have Alonzo running on a smart contract. Not happening, not yet. And then here is the other one. As we move into white, we'll do it in steps. So this tells me that we're, as a team, if I was looking at development team, and I've worked in this area before in software development, project development, in advanced systems like this, and a lot of times what you do is try to do these micro steps to be able to get to the next phase. In a lot of cases, you're kind of leveraging out basically things you, either the development team don't have an answer for, so you get to where you can and try to move the project forward. And I think that might be where Cardano is right now, because we're not necessarily getting a full disclosure. And granted, not that Charles is going to go out and say, hey, this is a full disclosure on what we're doing and where it's going. But when I look at things like what he did on the Lex podcast, where he's doing the interview, and not that that's a bad thing, but when you look at a lot of these founders and a lot of these people who are out there in the media, there's usually, as I said, there's usually a bit of agenda. Now, this was a 5-hour interview. Now, one thing I did pull out of the interview, and I think this is something that you guys will really like here on the channel, is mainly so you can understand the proof of work and the proof of stake argument and why it exists and why Charles is the way he is around proof of stake. I want to jump to a clip from the Lex Fridman podcast that really gives you a good understanding. This is a little bit of a longer clip, but we'll be right back. You guys can check this clip out, and then I'm going to give you some price predictions and where I think Cardano is going to be going. Let's cut to that.
Okay, so they all have the same 3 properties of pick someone in charge, do something, and validate it. The difference is that the picking mechanism for proof of work is you have to solve a puzzle. So it's basically like buying lottery tickets, and you can buy a certain amount every second with your computing devices, and some of them are ASIC resistant, so you run them on like a laptop or a GPU, and some of them are specialized hardware that you have to either manufacture or buy from someone who sells it to you. And that's just how many tickets per second you can get. And eventually you hit those magic numbers. And when you do, it means you have the right to make the block. And generally you bundle the block making with the proof of work system. Now you can do this looking for a single, or you can do this to actually shard it and look for multiple block makers at the same time. So there are sharded proof of work protocols, like Prism is an example of that. And actually, Ethereum got started this way with Spectre and Ghost and Phantom, the Avi Zahar's work, and Yonatan Lipinski. But the basic idea is you pick some collection of people, they make some collection of things, and there's some way to sort it all out, serialize it, and prevent double spends. Great. Proof of stake is the same, but it's a synthetic resource. So instead of doing things, they say, well, if you had 25% of the hash power on average over a long period of time, you'd probably win 25% of the time. Well, why don't we just introduce some randomness in from some source, and then 25% of the time on average over a long period of time, you'll win. So it's a synthetic resource. But you still have to do the other 2 things. You still have to make the block, and you still have to validate the block. The big difference is this step in the proof of work world is horrendously expensive. You use more energy than the nation of Switzerland. And the problem with that is that you have less resources for the other 2. And the other problem with that is that if this is horrendously expensive, you have an economy of scale kick in. So what ends up happening is the system becomes less decentralized over time because you have these vertically integrated operations. I mean, not everybody can go build a mining facility on a volcano in El Salvador. Not everybody can go to Mongolia and set up a 5 gigawatt power plant and a huge data thing. Not everybody has access to the patented ASICs that people produce. Because what if I don't sell it to you and I have the patent on it? Or what if I control the supply chain for these things? So you'll end up having centralization around maybe 10 or 5 major operations, as we've seen historically with proof of work. And that means you end up having like a ruling class of a mining oligarchy in the system. Proof of stake, if you design the parameters correctly, you actually get more decentralized over time, because as the currency goes up in value, the distribution of the currency tends to get more egalitarian. For example, Bill Gates, when he started Microsoft, he had 64% of the shares. Now he has less than 5% of the shares. So there's founder drift over time. As the value goes up, divestment occurs. You have more and more and more people coming in. That means there's more people who can participate in the consensus. You can even tune economic parameters. And this is what we did with Cardano and Ouroboros. We created this concept of K in the system, and it's just a parameter. And it's like a forcing factor that tends to accumulate a certain amount of stake pools. So you can set it to 200 and then 500 and 1,000 and so forth. But the basic idea is as the price of ADA goes up, you make K larger, and then you end up in practical terms, having a larger and larger set of actors making blocks that are unique and distinct. And the other good thing is this is a virtual resource instead of a physical resource, which means it's portable by a click of a button. So let's say China says mining is bad, we're going to shut it all down. And it looks like they're moving in that direction. You have all these people in WeChat just like trying to sell miners or trying to figure out how the hell do I move miners, because they have these huge data centers they've constructed. You can't exactly go and grab a server and like take it with you. It's huge. It's a lot of work. And if the government seizes it, well, it's their property now. A virtual resource, you can click a button and redeploy it to a different jurisdiction. So to me, for a virtual asset, it makes a lot more sense to try to tie your security to something endogenous, something within the system, because it's just like the asset. It can move anywhere at a click of a button, and human beings have a much harder time attacking something like that.
All right, so what you see there with Charles is he's really laying out the proof of stake model and why it is one that I think is going to put Cardano way ahead in the industry around where this is going, and why blockchain in general will be able to connect so many dots out there for a variety of industries, a variety of technology needs, a variety of use cases. All those kind of things are going to play into this. So the question is going to be here, and that is, how does Cardano, and you're watching the show, you're obviously an investor. Just as a reminder, when we do these market movers, they're a little different, okay? We compile all this stuff together for you. The main thing is we layer in both research and obviously things like this where we dive into these ridiculously long podcasts. But the key thing here is it's not investment advice. The key thing is it's giving you hopefully an idea of where you want to take your research and how you're going to be moving forward with your research. So I want to jump over to this next story. And this is the one that I think is interesting around where Cardano could be before it maybe moves up the scale in terms of its next price position. So this basically is talking about we may see a pullback. The main thing here is that the price has been on a 43% uptrend since bottoming out in June 22nd. ADA is stuck consolidating as it tries to scale higher, which is indicating a little bit of weakness. And investors can expect about a 7% retrace before a 22% uptrend to 161 in the kickstarts. This is kind of where some of the analysts are showing this uptrend of moving. But when you look at both the uptrend, this was the Cardano price currently setting the second lower high since July 4th. This move indicates the 16% upswing since July 2nd, which was slowing down. Therefore, investors need to be open to the possibility of a pullback. That's kind of my position right now with Cardano. I feel like we're probably going to see, and there's some reasons for this, and I'll show you this here on our TradingView chart. I think we're going to see a little bit of a pullback based on what we're seeing around just the sentiment and amplification numbers. I want to jump over to the chart and essentially kind of show you where sentiment had been rolling and where potentially this could fall. So right now, what we looked at was this high point right here, which came in at around $1.62. That's the point that we think a lot of people believe Cardano is going to get back to in a very short period of time. The fall off down, of course, for those of you who got a chance to buy Cardano at $1, there it was. The sentiment actually, though, held pretty strong at 53.29, and amplification still fairly strong at 50.17. These are high numbers compared to some of the projects that we've seen and done here on the show. Then we retested the sentiment analysis right here on this small little drop, which started around June 24th and moved over here to what was around June 26th. So about 2 days, a little sentiment click right there. And during this, and again, remember you had this upswing right here in price. But in this particular range, we had sentiment holding at 60.51 and amplification moving up significantly to 58.93. So that's essentially what we've mapped out here in our drawing. And this shows amplification overlaid into where the price is ranging right now. So it's actually a little bit lower, which goes back to my point on Trade the Chain. I want to jump back to that real quickly. Trade the Chain is still showing low sentiment in the last 7 days. Same kind of scenario that we're seeing right here in terms of a little bit lower sentiment. So what we're seeing here is price action that's outside the realm of where amplification is going. Amplification, to just explain that, is much like any other kind of social application that utilizes, the whole purpose that you see where this guy tells somebody something, this guy tells somebody something, and we look at the credibility of those who are sharing that information. Same thing works in the stock world. So what we're looking at is conversations that match up to those keyword use cases for Cardano, Alonzo, and about 100 other keywords that align up with that particular project, and then measuring sentiment and what its potential forecasted amplification could be. So when you look back here, there is a zone where amplification starts to widen up. And anytime we see this right here, what that tells me is that amplification is in play. When it's really tight like this, it usually is just a little bit of action. But what you start to look at is the credibility of the number of people who are going and talking about Cardano. And then what we think is going to happen, this is again right around the July 6th point. So, and here's July 7th, which is where we're trading right now. Price action, this is what they're talking about right here. The 128 to 140 is where I think this could fall. And this goes back to the story that we just did on FX Street, which is where the retracement could be dropping in before we see the actual alignment of this going back up. Now, here's the potential. So right now, if you're buying Cardano, you're probably in a good position if you're looking to go sideways or down. That's where I think we're going to be heading right here in a short period of time. But right here is an opportunity. This right here, if amplification stays at current pace, this is where it could go with some key potential people that are really moving the awareness of the projects. And I think the other thing that will play into this is if Charles gets on these other podcasts. There's rumor out there with Joe Rogan. There's all these kinds of things that a lot of times are just that, just rumor, that can help move these things. But I think we have to go back to the basis of what Cardano is really trying to do. And that is, you got to get Alonzo out. You have to be able to get the project moving, and it's got to be happening quickly in a sense so that you can maintain the steam for the project and get it moving into the fall months and hopefully see these kind of moves. So we could see a $1.81 high price, which I anticipate somewhere around July 22nd, providing that we continue to see the amplification layer holding for Cardano. Amplification is going to change just like sentiment by the hour, by the day, and also with key things. So the more that Charles is out there really propping the program and the project, and or we get major news on where this project is going, that's how you're going to see the token move. And this is kind of the scenario across all of cryptocurrency. This is the model that is working. I know a lot of people are looking at chain level data, which is great for, in some cases, it helps identify where accumulation is occurring. We're also seeing a lot of sentiment analysis and then amplification, which is something we're bringing to the plate that's a little bit different. And I think that's the characteristic that you have to be watching at, is some of these things are starting to prove out, showing where this stuff is happening. Always the scenario is if somebody or something starts to impede. For instance, the Elon scenario. When Elon gets involved because of his amplification or his potential to amplify something, just like Joe Rogan, if he were to get involved on Cardano and that interview goes bad, listen, that's exactly the kind of thing. So you have to be cautious as a lead on how those projects can go, especially on these deep diver interviews like with Lex. And of course, the Lex interview was not a bad interview. It was a great interview. It was just 5 hours long and there was so much to cover. But the point is that it could go either way. And that's the thing you have to be cautious about and conscious about in terms of your investment strategy. So as a reminder, again, this is not investment advice, but it is investment opinion. And of course, we put a lot of work into both data and research into a lot of these things to hopefully give you guys something to work with. If you're over on the podcast right now, make sure and give us some stars. If you're on YouTube, just subscribe. That's the number one way you can help the channel. And just as a reminder, watch out for those spammers in our comments. It's a big problem on YouTube. We continue to tell everybody, watch the spammers. We will never ask you for anything. We don't have a WhatsApp account related to our show. So don't fall for any of those crazy spam. And that goes for any of the channels out there on tech, crypto, EV, all the major channels that are getting spammed right now. So that's a big problem. If you have an idea for a show, just hit me up on Twitter, @Paul Barron. I'll catch you next time right here on Tech Path.